Good morning. Welcome to our webinar today with Rick Braa. Today we're going to talk about PPP, the Employee Retention Program credit, and some grants that are coming up for your business. We'd like to thank our sponsor, IBA, and also we are going to record this for later consumption on YouTube and our social media channels. So if you have any questions, be sure to pop them into the Q&A down at the bottom, and we can answer those on air for you. And Lex, let's go ahead and get started.
Great. So Rick, we've got a lot of stuff to talk about today, and I assume that we're going to get more questions in the Q&A. But if we have time, we'll also be able to talk about the $25 billion restaurant revitalization fund. I know that that's one of the things you've got covered, and potentially the talking about the Restaurant Act as well. So this is going to be a really full show. We expect it to only go about 30 to 45 minutes, but so if you have your questions, now's the time to put it in to make sure that we get it covered. So with that, Rick, why don't we go ahead and get started with your presentation?
All right, great. Well, we're going to cover what's available now, what's on the horizon, and what's kind of in being voted on, and then what is potentially down the road. So what's available now? Everybody by now should know that the PPP Round 2 $284 billion fund is available, as well as the Employee Retention Credit. And we'll take a brief look at some of those things. So right now, as it stands, the loans approved, we've had 1.9 million loans approved for about $140 billion. And that has slowed down over the last several weeks. So when it first launched, we were at about 36 billion a week. Next week, 36 billion. Then it went down to 28, then 25, then 15. So we got to 140 billion over about 5 weeks. So it's really dropped off. And as of today, the president is pausing that for 2 weeks. And it's a little bit precarious in some cases because the fund runs out on 3/31. So if he stalls it for a couple of weeks here, we'll be into pretty much the second week of March by the time it reopens. So hopefully you've got it. If you haven't gotten it by now, I wouldn't panic. As you see, that first bullet, there's 25 billion, and I underline that for a reason because we're going to swing back to that later. But last time we got about 8% of the money for hospitality. This time, 18% of the money. So they did exactly what they wanted to do with this. So 196,000 loans. The average loan was 129,000 versus 73,000 last time. So a little bit higher per, but we also had an additional 40% that we got because we had 3.5 times for most people compared to 2.5 times. So again, they're going to pause. The president's paused it for a couple of weeks for small business that have less than 20 employees. So a lot of you out there that have not had a chance kind of got crowded out by some of the delays with the SBA, some of the delays with the banks. Now's a good time to strike over the next couple of weeks because they'll be clearing those errors very rapidly. There's a series of errors that the SBA have had, and they've been working on clearing them up. So I expect that those things will be kind of sail right through if you're a small business. I think that's kind of the mandate and the hope for everybody. So the next 2 weeks, if you've got a small business, now's the time to get in there. You should get lots of attention from your lenders. And if you need a lender, please let me know. I can usher you over to a handful. All right, so on the employee retention credit side, just to kind of recap this, and I know there's probably some questions about this, I field them every day. So it's prior to the new bill, the new PPP, the ERC couldn't be used at the same time. In the year-end bill that came out on December 30th or 31st, they allowed a retroactive ability to use the employee retention credit. So now we have both for 2021 and for 2020. So there's also some talk of extending that all the way through 2021, but we have no data. So it's refundable if the credit is larger than the payroll tax owed. So basically what you can do is get a refund of your payroll taxes paid. Now, this is not a tax credit. Some people call it a tax credit. It's a wage credit. They're using the payroll taxes to fund it, but it's a wage credit. So you can get it paid in advance with filing form 7200, You can take it from each deposit, which would be a little bit of a pain, but your payroll company may accommodate that. Or you can take it at year end. So in 2021, you'll file Form 941. In 2020, you'll file Form 941X. So those must be filed from the last that we learned. They've got to be filed for each quarter of 2020. So triple the work than what we originally thought. We thought when it first came out that we would just have the one form to kind of make it up. And it looks like at this point that we'll need to file for quarter one, which has just a short period of time in it. Quarter one, quarter two, quarter three, and quarter four, if you have those. So it's going to be a lot more work than originally anticipated, but there's a good amount of money there for some people. So the one thing that we haven't gotten super clarity around is if you've already had your loan forgiven, what happens to that? Can you go back and amend that? At this point, we're not sure. So I think that for the most part, if you've already filed for forgiveness, it may be a little bit tougher road and you may want to wait a little bit longer for the guidance. And we really haven't got great guidance around this yet anyways. So some things will be clarified, I would expect, in the next couple of weeks, as we're midway through the first quarter already. So I would expect some clarification. We're particularly curious around the covered period because that would eliminate the double dipping if the government came out and said, we're just not going to allow you to do the ERC during the covered period. But it looks like at this point, we're probably going to be able to do that. At least we're proceeding that way.
You have a question.
Sure.
Is an owner's W-2 wages eligible for the employee retention credit?
I don't think so. I asked that question, and it is the employee retention credit. And that might be worth a quick call to your attorney to ask that. We can't get clarity on it, but we're not sure that that's going to be taken into account. So kind of the same place as we were a couple of weeks ago. We just don't know if you're W-2 owner, if you're going to be included, because it is the employee retention credit, not the employer, and they may draw a hard line around that, most likely.
All right.
Okay, so as I talked a little bit earlier, 2020 is a retroactive application. So if you've got greater than 100 full-time employees, and a full-time employee is 30 or more hours per week, this is not full-time equivalents. They have 3 different ways of counting employees, and this is one of the ways that they do it. So while you may calculate everything on an FTE basis, this is not that calculation. This is for full-time employees. So if you're in a restaurant, think of your managers, not your servers. There's a lot of servers that work, 28 hours. And if you had 2 of them previous or 3 of them, you might have 2 or 3 FTEs prior if you counted those hours up. But if they're at 28 hours a week, you do not count them. So these are full-time employees. And the reason that is important is if you have greater than 100 full-time employees, you can only receive the ERC if you're paying employees not to work. So if you have over 100, and there are plenty because the affiliation rules come into play here, plenty of groups can't get 2020 wages. If you have less than 101 or equal to 100 or less full-time employees, you can receive the credit even if you're paying employees to work. So just remember your control group rules apply. So if you've got a bunch of restaurants or a bunch of businesses, you're going to have to work with your attorney to see if you qualify or not. So that 30 hours per week, just remember that as the full-time employees. Operations are fully or partially suspended due to COVID-19. That is the $1 million sentence, because we know that every restaurant in the state of Washington has been partially suspended due to COVID-19. It started in March, it continues up until this point. So every restaurant is going to qualify. So under that particular clause in there, and that is golden for everyone, because then you don't have to worry about the reduction in sales or anything like that. You just have to remember the 100 full-time employees for 2020. if you were partially suspended, which everybody was, and that includes, some of the questions were around, well, I was partially suspended, but I was doing to-go already. I was doing drive-through already. But if you had a dining room and you were partially suspended, or you had, some social distancing type of things where you couldn't get as many guests through there, you were partially suspended. So I believe that on the whole, everybody should qualify for the employee retention credit based on that you have been partially suspended. So we know that applies to everybody. So greater than a 50% reduction, as I mentioned, if you're partially suspended, you don't really need to worry about that much. What you will run into is when everything is back up on plane, which we really don't expect until after the second quarter, where you're at 100%. So I think that everybody should get this for the first and the second quarter. So quarter one, as I mentioned, is just from 3/13/20 through 3/31, but there's still money there because most people didn't get their PPP loans until late April or May. So we've got a span in between there that you're going to qualify. Again, you're going to have to file for quarter one and quarter two, and quarter three and quarter four. So there is some money there. And then when your covered period stops, we expect that those numbers would continue to escalate, because you can't double dip. That's the most important thing to remember. There is no double dipping, and you'll see that through every single program, including the state programs. No one wants you double dipping. So the 2020 credit is 50% of the first 10,000 in wages. So 5,000, that's for the whole year plus healthcare per employee. This year it changes, and it's much more lucrative in the current year. In 2021, same restrictions, but we're still partially suspended. We went up to 500 full-time employees, which puts all the larger groups in. So the partial suspension continues, so everybody's qualifying. Available for quarter one and quarter two of 2021. As I mentioned, they're considering running this out through the rest of the year, but we have no official word on that. So for quarter one and quarter two, you will get it even if you had more than 100 employees. So as long as you have less than or equal to 500 employees, you should be able to qualify for this credit. So there are not a lot of humongous restaurant companies in the state of Washington. So I expect that most companies will qualify for this. Big difference between 2020 and 2021 is the 70% credit of the first 10,000 in wages, or $7,000 per employee per quarter. So these have to be on the non-forgiven wages for PPP. So you can't, again, no double dipping. So up to 14,000 for quarter one and quarter two. So you've got to plan really well on what to spend your PPP on. Make sure that you don't go over that 60-40 split. It's mighty convenient in 2020 if you don't qualify for a lot of these to use the PPP towards wages in a different ratio. But in 2021, you're going to really want to watch that 60-40 split on the PPP between labor and the rest of your expenses, which are quite extensive now. Basically covers most of your operating. So once you get cost of goods in there and you've got labor in there, you're already at 90%. So you throw some rent in there and you're going to hit 100% pretty easily of your PPP money.
We do have another question. Could you clarify how we calculate wages for the purposes of ERC? How do tips factor in? We do pay taxes on those as wages, but they are earned by the employee.
Yeah.
And they did count for the PPP.
Yes, I believe they're going to count for the ERC as well. So another good boon there. So you have your labor and then you get your tips on top. So it's what's paid to the employee. So whatever you're paying to the employee, the employer taxes aren't counting, but the employee taxes, whatever you're paying is going to count.
All right, thank you.
Yeah, that counting the tips should put a big smile on everybody's face. So what's on the horizon? You may have heard that Working Washington grant number 4 is on the way, and this is a bigger grant. This is $240 million grant. And they're carving out $150 million for people that are in operations and $90 million for temporarily totally closed businesses that were basically kind of threw up their hands and said, based on the new order, the new stay safe, stay healthy order on 11/15 that the governor gave, 20-25.8. So if you decided at that point you had to totally close based on that mandate, they've carved out $90 million to get you back up and running. So this is a huge gift. So 150 million to people that are operating, 90 million for people that are closed to get you reopen again. And you'll see on these coming slides that there is a lot of leeway in what you can use this money for. The biggest key, again, to stay out of the mud is to make sure that you don't double dip. So don't use the money of anything, of any one of these programs for the same expenses. So don't use a Washington grant to pay some wages that you use for PPP or ERC. That could get you into trouble, and you may end up having to pay things back. And there are serious ramifications around misspending this money. So be very careful with it. So the details will be released in March. I've read through the bill, so I've got a little bit of insight, but that doesn't mean it's not going to change. So the round 3 grant paid up to $12,500 for companies with sales less than 5 million. That is going to stay the same, that $5 million barrier. So if you've got restaurants that do over 5 million, you're not going to qualify for this. Then I'll look at 2019. So in this round, you can get up to 75,000 less other working Washington grants. So if you had the first grant of 12.5, you would be down at 62.5 for this particular qualification. The other thing is they can change at any point. So that is completely up to the state when they get all of these applications. They got a ton of applications last time and they had to shut it off. So it's for the most impacted industries, which the restaurant industry is, significant cumulative effects, which the restaurant industry is. It's not first come, first served, just like last time. And it's 5 million or less prioritized first. And if anything is left, then greater than 5 million. There was nothing left in the last round. So a lot of people didn't get a loan that have over $5 million companies. And this could be $2 million cafes that add up to $6 million, but you're under a single EIN. And so you kind of got left out of that round. I don't know that there's going to be money left over because they bumped the 75,000 up to 75,000. But again, I think what they'll do is they'll take all the businesses under 5 million, add them all together, and then say, okay, the maximum of 75,000, how much is each person going to get? And if there's money left over, which there may be, then they'll go to the businesses that are greater than 5 million. Okay, so there's some really great stuff in this bill. So the grant can cover expenses or costs incurred due to COVID-19 and were necessary to continue business operations. So this is really great stuff here. So upgrading the physical workspace to adhere to new safety or sanitation standards, PPE, updating your business plans. Why they threw that in there, I have no idea, but I bet the attorneys and the accountants are going to love that. Payroll, rent, lease, mortgage, insurance, those are all kind of standard things, but you have the word insurance, it did not say group insurance. So it could be a casualty as far as we know. We don't know exactly yet, but you'll have plenty of money or plenty of things to spend this on. Utilities, of course, inventory. That's the first time that I've seen that show up in any of the programs, to be able to buy inventory to get back up on planes. So you can buy your inventory to get reopened, restocked. So if you've been closed down or you're running a thin inventory and business starts improving, you'll be able to buy up some inventory and get that going. So as long as it's kind of in the normal course of your business. So, if you're serving subs, you're not going to be buying Louis and putting that on the shelf. So it needs to be within the ordinary course of your business. So what I read from that is kind of just keep to your model. Don't try to switch it around and go and buy a high-end liquor and do all sorts of stuff that you don't need to do for your brand. Supplies and services for operations. So that to me looks like whatever you need to kind of run your business. So when I read through this, I was surprised at how broad it is and how much you'll be able to use outside of PPP and ERC, because what's happening is there's so much government money that has been distributed that there can be a real overlap. And we're going to see that this year because there's plenty of money, I think, that's kind of heading the restaurant's way. I think it's going to be a very good year of funding from the government, at the state, at the local, and at the national level. So this is to cover the economic injury incurred due to COVID-19. So we want all of those expenses are meant to kind of get you back to starting over in some way, shape, or form. Again, you can't overlap these expenses with other grants or programs such as PPP or EIDL. So my advice is use this grant on new expenses. There's not a ton of money there, but why not fix up your facility and get it ready to exploit outdoor dining and all of those kinds of things.
Are those grants available even if restaurants didn't completely get fully shut down?
Yes, because they've been damaged. So again, that word partially suspended, all the restaurants have been partially suspended. So, and you've got, if we go back here, you've got significant cumulative impacts. So some people are doing okay through this. Most people are not, but whether you're doing okay or not, I can almost guarantee maybe your cash balance is better because of PPP and other programs like that, but you're still suffering a down year for most people. I would say the vast 99.9% of people, our sales are down. So they've got cumulative impacts that have added up. So again, if they target this at the most impacted industries, restaurants are in a really good spot.
We do have a couple more questions, but they are related to the ERC and the PPP.
Okay.
What if our credit is greater than the employer payroll tax? How do we realize the difference?
Yeah, so those are refundable. How you get the money back is another question, but I believe that'll come through the Form 7200. So there'll be an excess of what you have to pay, and those are refundable. Again, this is a wage credit that they're using the payroll taxes because it's an easy way for them to fund it. But this is a wage credit. It is not a tax credit. It's a wage credit.
Where can we find a comprehensive list of forgivable expenses for PPP round 2?
I think you can ping the SBA website. So they've got some what they call interim final rule, the oxymoron interim final. So that goes through there. There's also, you'll also want to read through the FAQs on the SBA website. So that is very handy because it has all of those kind of frequently asked questions, all the kind of one-offs that people have that may not suit everybody, but they're important. And there's some clarification on those between the FAQs and the IFR. That's where you're going to want to spend your time.
Then for 2021, is it advisable to do the 60%, 40% for PPP so that you can do the ERC?
Yeah, absolutely.
How do you apply for the ERC?
So the ERC is going to be done with when you file for your payroll taxes. So there's no application. You just start filing with your 941s at the end of the quarter, or if you need money in advance, some people didn't get PPP and they're tight on cash, you can use the Form 7200. And you can just do a Google on 7200 and you'll be able to bring that up. So that's how you can get that money. You can do it after every paycheck if you want to.
For grants, how do they assess the amount? What information do they need for the application so we can be prepared?
Yeah, great question. Thank you. So what to have ready? So you should have your W-9 ready if you don't have a copy. This is what they asked for last time. You should have a copy of your Washington State current government ID. And I suggest a driver's license in color because we saw weird things last time. It's not color. So the federal government turned some PPP loans back because the driver's license wasn't in color. Dollar amount of any grant or program money. So you're going to want to know what your PPP dollar amount is, your EIDL dollar amount, and then any state, county, or city grants that you received. They're going to want documentation. They're going to want to know how much that was at each level. And one of my previous slideshows a couple of months ago, when I think it was December that we went through this, I outlined every screen as we go. I don't think that that's going to change much. And I can throw those slides on the end of this as well when we send it out. So it kind of walks through the wizard of what to do, what to have ready, as well as the different screens as you go. So you set up your account and you get ready to go. Sorry, the number of employees laid off, gross revenue for 2019 and 2020. So they're going to want to know the difference. And then you're going to want to clearly describe your business and the impact of how the government mandates have affected your business. Your UBI number and your NAICS code, which most people will start with a 72 dash.
Right. Can these grants be used for summer camps with dining halls who were shut down in 2020?
Great question. Let's see. I would think if it's any business that has been cumulatively affected, hard hit, I believe you would be able to. And that'll be a question for your attorney, but I believe that it should be able to be used for that. They're really looking to hit these hard hit businesses. I think if it's a nonprofit, there's special rules around nonprofit. I don't have those handy because we deal with primarily profit. But the House bill for this particular one is 1368. So if you just do a Google on 1368, just put in like Governor Inslee House Bill 1368, that'll have the bill, and it's only 19 pages long, so it's relatively short. Again, they're going to come out and make some rules around this that are a little easier to understand, but there are special nonprofit things carved out in this particular bill.
Okay, and last question before we move forward in your presentation. How do you apply for PPP round 2 if your restaurant is shut down? You need to put the number of employees at date of application.
Yeah, great question. So that you should use the same numbers that you used last time. So pull out your PPP 1, use the same numbers from last time. So those are 2019 numbers. They're not looking for any current 2020 numbers. So use the 2019 numbers.
All right, thanks.
All right, so what's up for vote? Right now, the restaurant revitalization plan, $25 billion. This is vote is expected this week, maybe as early as Friday, or as late as Friday, I should say. So it's part of the $1.9 trillion Biden plan that he rolled out. This particular $25 billion fund was voted on the Senate to throw into the $1.9 trillion, 90 to 10. 90 to 10 in the Senate. So they realize that restaurants need money. So grants can be up to $10 million. Again, they're going to come out and clarify this once it passes. It's not passed, but it is on the horizon and up for vote as part of the $1.9 trillion plan. There's $5 billion set aside for restaurants that have sales with less than $500,000. So if you're a small restaurant, there's $5 billion that are set aside just for you, which is tremendous. There's $20 billion available to distribute in an equitable manner to eligible entities of different sizes based on annual gross receipts. So that basically they can make adjustments to where is your business. Again, this is a national thing. So where is your business? New York is more expensive to operate than Seattle. Seattle's more expensive to operate than Bellingham. So the administrator can make adjustments based on where your business is and dole out money however they see fit, based on your local market, which is the first time we've seen that on any type of bill. They're really trying to get to small businesses with this money, especially restaurants. So you have to have a good faith certification that the uncertainty of the current economic conditions make necessary the grant request to support the ongoing operations of the eligible entity. So you really have to think about this. If you've got a bunch of money in the bank, Do you feel good about? It's a good faith certification. Do you feel good about going after this money? Because I think the scrutiny increases the more and more you get. If you get over $2 million with your current business, the scrutiny is going to be higher on you than it will be on other businesses, smaller businesses. So you couldn't have received a loan under the Shuttered Venues Act, which is a tremendously helpful act for those that have nightclubs and places that have had to be closed. The Shuttered Venue Act is just absolutely a tremendous act, and that's something that you should look into if you've got a shuttered venue, such as a nightclub or something along that line. Don't take a PPP. Don't use ERC. Study this first, and make sure that you. I think you're probably okay on the ERC side, but the PPP, don't take a PPP. Go for the Shuttered Venue Act. It's a tremendous act to help those people that have been shuttered to come back alive. So the initial 21 days, priority is going to go to women-owned. I can hear the women out there raising their arms, being glad about this one. Veterans, socially or economically disadvantaged small businesses. So these are really the first 21 days. The way this will probably go down is they'll announce it, they'll launch it, and then for 3 weeks, everybody sits on the sideline as the women-owned and the veterans and the socially or economically disadvantaged small businesses come forward and grab their share. So they're going to get that money to the people that need it the most at the beginning, and then they'll open it up to everybody else. And then it's going to be a horse race. So if you recall, how much money has gone to restaurants currently out of the current round of PPP, initial slides, 25 billion. So we've collectively come together for 25 billion already. So we expect that this money is going to go pretty fast, because last time we got 43 billion. And this will again be for smaller businesses. So the maximum $10 million or $5 million per location, and the affiliation rules apply. So the great big guys, people that have more than 20 locations, whether they have the same name or multiple names, they don't qualify for this $25 billion. This is for smaller independent operators that make up the vast majority of the employees in the United States. So the per location and the affiliation rules apply in this case, limited to 10 million. You can't be publicly traded, so no publicly traded companies can participate in this one. The grant is pandemic related. So here's the kicker. This is 2020 revenue minus 2019. At least at this point, that's how it reads. 2020 revenue minus 2019. So if your sales are down $3 million, that's potentially could be as much as your grant. So there's a lot of money here, and it's going to go very quickly. So we're going to want to make sure that we stay in touch around this. We may call, if it gets voted through, we may call another session if there's some clarity around the rules, just to be ahead of the curve. But I expect that it gets voted in, and then we have a little bit of time for them to set the rules, and then we'll do another session just to make sure everybody's ready to go, because it'll be a bull rush. So first time we've seen things like overestimates must be returned. So if you miscalculated, for example, your 2020 revenue and you overreported what your difference was between 2020 and 2019, you got to send that back. So what can you use it for? Payroll, mortgage interest, rent, utilities. Sound familiar? Just very same things. Maintenance. Now, this is what I was really excited about, including construction to accommodate outdoor seating. Remember, there's all sorts of money that's coming towards you. You've got ERC, you've got PPP. You want to make sure that you don't double dip on those sides. I was very excited to read, including construction to accommodate outdoor seating, walls, floors, deck surfaces, furniture, fixtures, equipment. Now, they'll come out with maybe a little more clarity around this, but this is really positive to be able to fix things up as they should be, especially for safety reasons. But to be able to build some stuff outside, to be able to open your facility up if there's a wall that you wanted to take out, provided that this isn't going to go away anytime soon, you may want to make some alterations to your facility, and you can use this money to do that and not double dip. So supplies, all of the bills now we're providing for PPE and cleaning materials. Specifically spelled out in this, food and beverage expenses. They call it perishable goods. In some of the other in the PPP2, they call it perishable goods. But this is the first time that we've seen it spelled out explicitly, food and beverage expenses that are within the scope of normal business practice. So again, you're not going to buy Louis for your Subway. So this has got to be part of your normal business practice. So they want you to kind of maintain the continuity of the business that you had with some tweaks, outdoor dining, all of that kind of thing. Covered supplier expenses, operational expenses, paid sick leave, and any other expense the administrator determines essential to maintaining the eligible entity. That's exciting. They can just add more stuff on there. So that's great. That's great news. So if you can't use the money, again, this is the first time we've seen any of this kind of thing that's explicitly spelled out, return the unused funds on or before the last day of the covered period. The covered period, get this, goes from February 15th, 2020 to 12/31/2021. And the administrator can extend this for up to 2 years. So think about filling in all of those gaps that you didn't have money and you didn't have any funding for. This can go in and fill out all of that, at least at this point, the way it's spelled out. Again, they still got to come out with the final rules. It's going to be voted in final rules. But this can fill out all of those gaps where you lost money. So very, very exciting.
All right, we do have a couple of questions from the audience. Yes, this will be this slide deck will be available up on our website at coronavirus.wowhospitality.org. And then we have a couple of the same question coming in a couple of times. If your business is 50% woman owned, would that count?
I believe so. I'm not sure what the final rules on that, but I would believe it if it's majority owned. 50% is cutting it close. Again, a good question for your attorney. The attorneys know this better than we do, whether you would qualify for that.
Last question we have right now is, what if we didn't open until October 2019?
There's special rules for this and how you calculate it, but it is completely available. So there's just different ways that you calculate. I don't have those calculations in front of me, but if you open at the end of 2019, this will be available to you. It's just a different way of calculating the revenue spread between 2020 and 2019. And I can dig that up. It's just not final yet, but I can dig up what that calculation is. It's funny because I looked at it last night, thought, well, nobody's going to ask that question. So my apologies for that. But yes, you are qualified.
All right. And once again, the website where the slide deck will be available.
Hold on.
Oh,
Lisa, one second. So just in thinking about it, it's actually the average revenue for 2019. So if you're open for 1 month, you'd multiply it times 12. So it's the average revenue for 2019. Whether you're 5 months in, you'd take 5 divided by 5 times 12, and then you'd compare that to 2020. So it's the average revenue for 2019. If you're open 1 month, or if you're open 5 months, 2 months in this case, 2 12s times 12.
we got a couple more questions. First of all, the slide deck will be available on coronavirus.wowhospitality.org. And then our next question is, what is meant by gross revenue for the SBA?
Yeah, so that's going to be sales, less discounts. I wouldn't go past the discount line. I would put kind of net sales in there, what we consider, which would be sales less returns and allowances in retail language, but versus comps and promos in our language. So net sales is what I would use there.
Okay.
What you're filing on your B&O return is the safe way to go.
Can you describe in more detail about how this grant will be forgiven? If you have received PPP2 funds already, can you apply for this new grant? And what exactly do you mean by, do you need these funds?
Yeah, it is a grant. So there is no forgiveness on this. And so that's why I underscored the word grant. This is just like the Work in Washington grant. So they have the right to come out and audit it, but it's a grant. there's no application for forgiveness. You get the money, it's yours. Very much like you remember, in some cases, people got the $10,000 EIDL grant. That was your money. Just make sure you use it correctly because they can't audit it. Now, the odds of an audit are not super high because there's so many of these. You saw there's already 2 million loans for PPP just in this round alone, and 7 million last time. This is an organization with the SBA, for example, that is used to doing 40 to 50,000 loans per year. Now they've done 10 million with the EIDL and the PPP. But this is a grant. This is a grant. This is not a loan. It's a grant. Different program. PPP is a loan. ERC is a credit. Revitalization Fund is a grant. But they do want you to return. Again, they want you to, if you don't use it, you've got to send it back. You've got to send the money back.
One more question right now. If 2020 is greater than 2019, are we excluded from this?
From this?
I'm assuming it was the person who had the business that opened in 2019.
Yeah. But this is the Restaurant Revitalization Fund, and if I'm thinking it's the same, they had an extra restaurant this year. I actually don't know. I can get the answer to that, but it is a difference in sales. You may be able to take your location that was opened in 2019 and get the annual revenue, but again, that's going to be walk on the tightrope. So you know where I'm going. So you had one location, you opened your second one, you open it at the end of the year, you take that month, you divide times it by 12, and then you compare your 2020 revenue to that for that particular location. That I don't know. That is not clear, but I expect that would be cleared up in the interim final rule that comes out around this. But I would prepare as though I were going to get it. If there's no way to get it, and you'd probably need a special lender to help understand this, but the idea isn't that they penalize people that are growing.
Is this grant considered taxable income?
Not at this point. As one of my clients said, next thing you're going to be talking about Santa Claus.
And the question coming in is, we're getting pushback from our CPA about using perishable goods as part of the forgiveness process for PPP2 funds. Where can I get documentation for this detail?
That again is going to be on the interim final rule. So you're going to want to look at the PPP2 guidance that came out included that, and it made it retroactive. And if there's questions by your CPA, I would hang on. Again, there's no rush to file for forgiveness. There's no rush, other than you want to kind of get your taxes done, but there's no rush because the ERC could potentially throw a wrench in everything. So we are holding off on filing forgiveness for anybody that didn't, that unless you didn't qualify, then file for forgiveness.
Rick, I've got a question. One of the items that was a qualifier for this was economically or socially disadvantaged businesses. What is the definition of that? Is that based on zip code? Is that based on ethnicity?
I think of these small areas, like in our area, for example, we have like the Rainier Valley Fund. So areas of the city that might be disadvantaged, that have these special funds to kind of prop it up, those would be the areas that they're really looking at. And again, that's that first carve out of money that they have there, the $5 billion. That's going after women owned and socially economically disadvantaged. So those are going to be the for lack of a better term, the areas that don't have as many services as you would normally get in a different area.
Great. And we're at 45 minutes roughly. So let's give everybody a few more minutes to ask any final questions. And then Rick, I think we could probably cover the Restaurant Act items for the next webinar, but
Perfect.
this was a very meaty topic. There was a lot of great questions, and Lisa, let us know if there's any more that popped through. So closing it out, Rick, what are some final thoughts that you have?
Well, I'm really encouraged by all the money that is pointed this direction for restaurants. I love the state of Washington coming forward with the 240 billion of CARES money, or million. Be nice if it was billion, but 240 million of CARES money. That kind of helps fill in some of the gaps and the cracks. I think there's going to be a lot of money poured towards the restaurant industry this year. The biggest thing is going to be keeping things straight and documenting very, very well, because it's going to be bingo hopper audit, and you don't want to be the one that gets the ball pulled out of the bingo hopper. So keep your numbers straight. Keep everything really well documented. I know it's a very big deal to have an audit ready package. That's why you want to work with professionals, but you're going to want to have an audit ready package for anybody to come in and look at any one of these things. So keep your numbers tight, keep things documented, make sure that you don't cross over. But there's plenty of money for us to get back up on our feet as an industry this year, looking much more positive for 21. This year is really about rebounding, and you see the word revitalization. That's really what the government is looking to do. There's a lot of champions of restaurants in Congress, much more than we think. So whether we get everything we want this year, like the Restaurant Act of 2020, that's now the Restaurant Act of 2021. These programs are really essential to come out and bridge the gap. And I think 21 is going to be a great year of everybody getting back up on their feet.
We do have one last question. If you have already received the second round of PPP, is there any need to apply to ERC?
Well, you're not going to apply to ERC. You're going to use the ERC. Just make sure you don't use it for the same expenses, but you'll want to use both the ERC and the PPP. Now, whether the IRS comes out and says you can't use it during the covered period, we don't think that that's accurate, that's going to happen, but it may. There's a little bit of risk there, but I doubt that it's going to be with the 60-40 split. I just can't see them coming out and saying you can't use ERC and PPP together during the same period of time. There's a short paragraph that's been published that says you can do that. So you will want to take advantage of the ERC, and you want to make sure that you do it right. This is not an area, when you're talking about payroll taxes, that you want to make a mistake. So make sure you work with professionals to do this. It can be a little trickier than you think.
All right. Thank you so much, Rick.
Absolutely.
And we look forward to your conversation next month. Everybody have your questions ready for then.
Thanks, everybody.
Thank you.